My name is Lou Darden. I'm with Kreismann-Bayer Insurance Agency. We are the, if not the oldest, the second oldest brokerage in St. Louis. Actually founded by St. Louis mayor. So a little bit of history on us, and I really like to bring up our history more or less to let people know we're established. We're not overnight, and we've got great relationships with all of our carriers because of our age and reputation. We actually have access to carriers that not all brokers do, and we're also very selective. So just because somebody can offer you 100 carriers doesn't mean that they're all good. So a lot of what we do is we deny a lot of companies if you don't have a good claims history, or if your reputation isn't well, then I have to believe in what I am selling to my clients. Because more importantly, I'm not selling them anything. I'm offering them protection, and hopefully you never need to use your insurance, but when you do, having the peace of mind to know that it's going to be taken care of is really what's important. A little bit about me: born and raised in St. Louis. I'm a Florissant kid, so North County represent. Although now, if you see me throwing up West Side, I'm not. That's not for Tupac. That's for West County. I'm a West County boy. I've been adopted by
Okay.
by West County, and I appreciate it. Everybody's got better hair and a thinner waistline than me out here, but I'll if you meet me, I'll give you a sandwich and you'll catch up with me. So,
Wow.
um, what I like to do for fun, I'm starting to love golf, and when I say I love golf, I hate golf because it can be frustrating. But every now and then you hit a good shot, and you think you're great, and then you love it. You may not know this, but I am non-locally famous. My biggest passion is singing. Music
Okay.
is, no offense to anyone, music is my church. I love music. It's universal. It's one of the things I love to say we have more in common than what divides us. And I can't play a guitar to save my life, but fortunately I can sing. I've fundraised for, well, at least the last 20 years, for multiple events and charities and things like that. And my passion is people. I love to help people. And without sounding preachy, I live by a term, or by a phrase, that if you have an idea and the ability to help someone, you have a moral obligation to do it as long as it's not an inconvenience to you. And so that ties directly into what I do career.
Lou, I want to switch gears here. I want to
Sure.
talk about our folks that are current homeowners. And in relation to them, I want to talk about policy limits. With
Yeah.
today's rising construction cost, what do you suggest a current homeowner needs to do to assure themselves they are appropriately covered when it comes to replacement cost?
All right. So I love this question. Thank you for asking. So, and for anyone watching this, I really want you to understand what placement cost is, and why things are where they are. So, because it's often disputed. I get people that buy houses like, there's no way it will cost me this much to rebuild this home, and then I hear the reverse. And so you can select your coverage, but generally recommended reconstruction costs, unless it's an investment, is always going to be the recommendation. There's If you start to customize too much, you lose a lot of included coverages. But reconstruction cost is that's going to be based on, a lot of the times it's also going to be based on your loan, and what your mortgage company requires. So if you've got a house in Clayton, and it's worth $750,000, and let's just say it's a 2,500 square foot home, you pick that up and you put that in Florissant. Instead of 750, it's now worth 250.
Right.
But if your loan is 750, your lender is going to require you to carry higher. It doesn't really matter. If you own it outright, then you can choose what's best, what you feel is best, but there's usually not a massive savings. So I generally try to tell people, don't get too hung up on the reconstruction costs. Our calculators are very accurate for what it's going to cost. And there's even coverages. Again, one of the bonus coverages you lose if you mix around with it too much is most carriers offer a coverage called extended dwelling, or extended replacement costs. And that's going to be coverage that's added on to what we insure your home for, to protect you against the risk of inflation of materials and labor. And so for saving maybe 50 to $100 a year, I don't think it's worth it to give up that coverage in addition to making sure your property is properly
Well, on
protected.
the subject of current owners, I do want to talk about personal property. You know, how often are you seeing homeowners tie in the personal property coverage into their home insurance policies? We talked about this a little bit earlier before this
Mhm.
call. Is this something we can expect to see more of with the increase of folks working from home? For example, you know, the high dollar, maybe office
Yeah.
equipment within the home, things of that nature.
Yeah, yeah, great question. So personal property automatically comes with your home insurance. It's in general a percentage of whatever your home's insured for, that dwelling coverage. Um, a lot of carriers are around like 50%, some can be as high as 75. That's their minimum, whatever the carrier decides. But if you need excess of that, if you need anything in excess of that, it's just really great to have a conversation with your, with you and say, hey, is this enough to protect? Because everyone goes into a default of, oh, my stuff's not that expensive, or I don't, this couch was a hand me down, or this was taken. And I say, think of everything as if it were brand new. We don't sell depreciated value. Everything is replacement cost. So I don't care if you've got the original big screen TV knob and tube that probably weighs 1,000 pounds. We're going to give you money for the flat screen. So
Yeah,
think
okay.
about it from those terms, and the difference between, let's just say, if you had 100,000 of personal property coverage on the policy by default, but you feel like you may need more, the difference between 100 and say 125 is probably maybe $20 a year. Could be less than that. It's all carrier dependent, but it's not that expensive. It's something you wouldn't even notice billing wise, but it's something that you would if you needed
It's
it.
an important one for me as somebody, as an agent that's going out and touring property just about every day. Want to know what it is. I've been hearing about insurance companies cracking down and not offering insurance on roofs that are recorded as older than 10 years old. Is this
Mhm.
true? With such a big ticket item like roofs, would like to know kind of what you're hearing, what you're seeing from insurance companies on roofs that exceed 10 years of age.
Yeah, so insurance companies have been changing the way they cover the exterior of homes. So it's very common that you'll have a separate wind hail deductible. That's weather. That's 99% of the time going to apply to your siding and most importantly your roof. Insurance companies have started forcing a higher deductible on those, whether it's 5,000 or it's 2% of what they insure the home for. If it's over 10 years old, we're starting to really see that enforced. Whereas if it's under 10 years old, they'll typically let you, depending on the carrier, you can pick your deductible. Here is the biggest pro tip I'm going to give anyone that's listening to this. If you've got a new roof in the last 8 years, really 10, but especially the last 8, make sure that you're getting that new roof discount. The new roof discount is the second largest discount that you can get on your home insurance. And the reason I stress make sure your agent knows that is because a lot of people assume, hey, I had a roof claim, State Farm or American Family, or pick a name, they paid it out. They obviously know I have a new roof. Well, it's still on the agency side to go in there and manually make that adjustment.
Okay.
And it's very common for me to talk to people that have a brand new roof. They've had it for a few years and they're feeling the weight of having that paid out claim, but they're not seeing the benefit of having the new roof. The new roof discount will stay on your policy for 8 years. It's a depreciating increase, it's a depreciating discount. That said, it one, it outlasts the length of a claim stand on your record of 5 years, but two, it's often more of the discount exceeds the claim hit. So they actually, I don't even want to say balance each other out, but I can tell you, I talk to a lot of people that aren't getting that new roof discount because their agent didn't follow up with them to like say, hey, did you actually get that done? It's a massive discount. I've sent people checks for five, six, $700.
Hold on, did you account for my new roof discount? No, I'm
Yes.
just teasing. I know you did. I know you
Yep.
did. You were on me about it, and yeah,
I
it's been reflected. I appreciate that. But the
stalked
whole
you.
the separate deductible thing for a roof over, or yeah, 2% of the total value,
Mhm.
that's important for people to know. When they're going out and buying a home and they're looking at that seller's disclosure and it's noted there, hey, this roof is 15 years old. something to keep in mind, because that's probably going to be an expense that, folks are going to see within the next 4 or 5 years or whatever, whenever that roof does need to be replaced.
Absolutely. And here's another thing really quick, and I'm sorry.
Okay.
Please make sure, so that if I say give anyone to buy a home, have your realtor get a clue report. A clue report is, as an insurance agent, I can typically pull insurance history on a property up to the last 10 years, but especially the last 5. Why that is relevant, and this is the second most important thing I'll say on this call, is people don't realize that the previous homeowner's claims, that the claim stays with the home. So if the previous homeowner had 2 claims, say it was a sewer backup, and then they got a new roof, or even if they made an inquiry, that's on the record of that home, and that will affect the new homeowner's price. That will affect your premium. You could buy a home and already have 3 claims on it that weren't yours.
Yeah.
That drastically changes your price. That's the difference between your home insurance being $1,000 a year and $3,000 a year. And I think any buyer would like to know that ahead of time. So I highly recommend talking with agents like Giuseppe and the entire bomb squad in general, who do take the time to look out for their clients and say, hey, Lou, and he's done this before. Hey, my client's considering 123 Jackson Street. Let me know about it.
Yeah.
Because that's something that, to me, it's the same difference of, hey, is this in a flood zone or is it not? Because it changes the game.
Absolutely. One of the most important tools in my tool belt is that clue report. And I mean, yeah, not a lot of agents know about it. Not a lot of agents have this kind of partnership with a insurance agent. So much appreciated there, Lou. Well, aside from the roof, Lou, what other areas of a home does a prospective buyer need to be mindful of when it relates to their eventual insurance policy? Whether it be the age of the electric, is it newer wiring, older wiring? Does that play a role? Does the presence of a pool shape an insurance policy? What are some other maybe examples or things we need to be thinking about from our prospective buyer realm?
Oh yeah, I'll hit a couple of them. One on electric. There's not really any carriers that want to cover knob and tube or aluminum wiring anymore. Um, a lot of times you'll see homes where they've been, especially from an electrical standpoint, been completely updated and renovated, but there may be a small section of knob and tube in the attic or something like that. That's something that say, you definitely want to make sure you have a conversation with your agent, and so we can prepare for the worst to hope for the best. And the thing is I always tell people, don't guess, especially when it comes to a claim, but just even if you don't know, because insurance is a don't ask, don't tell agent industry. I never advise anyone to lie. I would never say that. And once you tell me, I know. So, but at the same time, don't guess. And you get a lot of people, oh, I think this or I think that, and I think sometimes that's to their detriment when they're really unsure. So having a good communication with your agent I think is very paramount to your coverage. I always tell my clients, for the most part, anything you say to me is off the record unless you want me to put it on the record. Of course, if I say, hey, you've got a free glass repair, you're like, good, my windshield just broke last week.
Mhm.
Obviously, if the insurance calls and say, hey, did you know about this? I'm like, yeah, I did,
Right.
but again, working communication. A few things coverage wise. I know for buying a home, I would definitely make sure. I think it's very invaluable to check the situation in the basement and the drainage. If there's a sub pump, make sure it's operating. Not all inspectors check that. Make sure it's operating. Again, you don't want to find out when it's too late. And there's a lot of misnomers with extras on coverages. So a big one is pool. Everyone thinks that a swimming pool is going to be more expensive to insure, and that is technically not correct. It is technically going to be the same price, but it should cost you more. And here's why. As I referenced in an earlier question, the difference between the 10% coverage and the proper coverage you need could be tens of dollars a year, to go from, let's say, 100,000 to 200,000 in separate structure coverage. And now if something happens to that pool resulting from a claim, now it's fully covered, in addition to your fences and things like that. So making sure you communicate with your agent, and here's why it should go up. Again, for tens of dollars a year, now you have adequate structure coverage. And then the other side of it is your liability. Obviously, you have a pool, you take on a lot more liability. So I recommend increasing that. Well, how much is that going to cost?
Yeah.
The industry minimum of liability on home and renters is 100,000. The difference between 100,000 and the industry normal of 300,000 is on average about $3 to $4 a year. The difference between that and $500,000 is another $5 a year. And we can go up to $1 million for, let's say, the difference between 100,000 and 1 million, $25 a year, give or take.
Yeah.
And
Okay.
the peace of mind, if heaven forbid somebody would have a mishap in your pool, is night and day. So a swimming pool or these extra things in your backyard aren't going to technically raise
So
your
much,
price.
man. I mean, your time today has been valuable. I think you left us all with some really solid, gold nuggets here, whether we're current owners thinking about reconstruction cost, or, just high dollar personal property items. I think these are things that some might not be considering with their current plan and need to have somebody like yourself as an outlet, somebody who's been in the business for as long as you have, somebody who has, seen the unique situations and know how to handle those, unique situations is very important. So we appreciate you as an outlet, to going to the prospective folks, talking about the individuals who are looking at homes maybe with an older roof or outdated electric, or maybe they're looking at a pool or a separate structure and they don't know how to tailor their insurance policy, or even how to start the conversation. Here you are here to have those conversations. You've had hundreds, if not thousands, of these conversations before.
Mhm.
And again, I just really appreciate you taking the time today to do this. You've been our dude for a long time and are going to be our dude for a long time. So
I
thanks so
appreciate
much,
that.
Lou.
Well, just happy. Thank you for having me. It's been a pleasure. I love working with you and the team. And if anyone is ever insurance curious, meaning you have a question, please know that I'm available to be reached out to. I won't solicit you. I'll just answer questions. I'm happy to help anyone. And it's just been a pleasure.
Yeah.
Just strengthening our relationship. Just happy. Thank you for everything you do for me and my agency.
Thank you, Lou.